The nation's growth has been stunted by Europe's debt crisis. The latest figures show the economy grew at half the speed expected during the December quarter. Despite this, the Treasurer is standing by his promise to return the budget to surplus. Here's finance correspondent Philip Lasker.
Today's numbers highlight the fear that hurt the economy in the run-up to Christmas.
Things were looking pretty grim in Europe, and I think that affected confidence locally, it affected commodity prices.
The national accounts showed the economy grew by 0.4% during the December quarter, half what was expected, leaving the growth rate for 2011 below average at a slower 2.3%.
There is nothing in these numbers that deters the government from bringing down a surplus in 2012-13, although obviously this makes that task more difficult.
He's never had a tough budget because he's never delivered a surplus. So I think Wayne Swan is gilding the lily yet again when he talks about how tough it is for him every budget.
The numbers showed company profits, investment, housing and consumer spending were all weak, while the strong Australian dollar hit local tourism.
I fear that there will be less revenue and we will certainly need to go through another savings exercise.
Also making the Treasurer's task more difficult is the resurgence of fears surrounding Europe, as some lenders to Greece refuse to accept a forced cut in the value of their loans.
And that could scuttle the entire Greek bailout. And I think that's really been at the heart of this violent sell-off.
Markets in Europe and the US dived around 2%. Asian markets were also weaker, with Australia's 60-point fall, one of the region's worst. Still, the Reserve Bank isn't overly concerned yet.
In Europe, we're going to continue to see these 2 steps forward, 1 step back, and I think what we've seen last night probably is 1 step back.
But the backwards steps may get bigger and more frequent as Thursday's deadline for an agreement on the Greek bailout approaches. Philip Lasker, ABC News.